We have seen India's stock market zoom in trade today. Both the benchmark indices, the Nifty and the Sensex, surging over 2% in trade, with the Nifty rallying over 500 points, while the Sensex spiking over 1,500 points. So what really are the reasons for this sharp surge? And is the sharp rebound here to stay? To decode this, I'm joined by Ajay Bagga, Senior Market Expert, as well as Pralok Gupta, International Trade Expert. Thank you both for your time and for joining us for this special discussion. Ajay Bagga, with Donald Trump blinking and markets booming, a volatile market dependent on Trump and global cues, you'd say?
Yeah, absolutely. Global sentiments are better today, and we are seeing that reflection in our markets.
Right, global sentiment is better and we are seeing that reflection in our markets. But are you saying that now, day after day, of course, we have seen the tariff flip-flop, we have seen, of course, what the cost of all these tariff tantrums, as we were calling it, have had. So do you think now, day after day, our markets are also dependent on what is going to happen in the rest of the world?
After a while, we do become dependent, and mostly it's because of the portfolio flows. So we have seen over the last 4 days, if you saw, FI sold in the cash market 9,000 crores, 4,000, 4,000, 2,500. So that was what was an overhang. Today, the rupee is stronger. It's a pointer that probably FIs might have a net buy figure today. So it's more through the portfolio flows that we were getting linked into the global sentiment cycle. Otherwise, we are a very strong domestic economy, and the domestic story remains intact.
Right, Pralok Gupta, I'd like to begin, by asking you that, look, supply chain disruptions have been caused, and, the spotlight really on supply chain disruptions. They may have been paused for the moment. Of course, earlier those concerns were emerging. At the moment, they have been paused, but they're clearly not off the hook, in Donald Trump's words.
Absolutely. The reason for market surge today is that there is a sentiment that Donald Trump is blinking, and the approach earlier was either my way or highway. But now, with the exemption of laptops, computers, smartphones, there is a feeling that he has to take care of the industry needs also. And going forward, if other industry will be suffering significantly because of these tariffs, so there would be exemption in other sectors also, and he indicated for the automobile sector also. So that's why there is a positive thinking that the approach of confrontation that earlier he was taking, that completely dictating the terms, that is softened a bit, but at the same time, it is, I won't say that this is something, it is a concrete thing. Still, there are indications that there could be reversal of tariffs on some of these exempted products. So there is a kind of, I would say, seesaw game that is continuing with respect to Trump's decision.
Right, the seesaw game continues, but Pralok Gupta, while of course there is a respite, there is some sort of a seesaw, some sort of exemptions, but how do you think electronics and auto part divisions really, and manufacturers really, and exporters can then prepare for once this respite is over?
As far as the April 2 decisions are taken, so there is a clear-cut thinking that there is going to an increase in the price that for the US consumers, that is for India it was 26%, for other countries 36, 37, 46%. So at least for now, it is sure that it is not going to that much. Plus, there is a chance that some countries will start negotiating with US. India is also in the process of negotiating bilateral trade agreement. So that means this fear of increased tariff, that will not be applicable for many countries and many products. So that way, the companies can still think of a relatively, I would say, stable supply chains, which were completely uncertain after this April 2 decision.
Right, Ajay Bagga, do you agree? And of course, barring US and China, the focus shifting really from trade war to trade talks. How do you see this going forward for firms?
Yeah, market is extrapolating the relief that has been given, the reversals, firstly on reciprocal tariffs, then on smartphones and other electronic items. There's a hint that there might be a reversal even on autos and auto parts. So markets are waiting for that. But on the other side, there has been talk that semiconductors and pharma products are under investigation under Section 232, and they will be levying tariffs there. So we are not out of the woods. We have a 90-day window. Hopefully, things will work out better than what was unleashed on the world on 2nd April. So that's the hope, and it's a hope rally based on that.
It's a hope rally. We're not out of the woods, you say. Pralok Gupta, do you agree as far as semiconductors are concerned? What should India's approach be then?
Certainly, there is a, as I said, that all these things, whether it is semiconductor, pharmaceuticals, these are the things which ultimately affect US industry, US consumers also. And President Trump cannot be blind to the needs of their own citizens, their industries, because ultimately he is promising America great for those industry, those consumers, better job opportunities at low cost. But if these things are continued, like pharmaceuticals, tariff on pharmaceuticals, or non-availability of chips, higher tariffs on semiconductors, then the same industry will suffer. The same US citizens for whom he is promising a very good America going forward, they will suffer. So that way, I think that this exemption will continue for more products, and more of a negotiating approach that US will take going forward. But on the other thing, which we are talking about, this surge in market in India today, there are domestic regions also that are contributing to this surge, and primarily the interest rate cut by RBI, and today SBI has also cut the interest rate by 25 basis point. The data on inflation, that has also give good indication. It has come down as compared to the same period last year. So these are all positive signals from the domestic side also. So for the time being, we have positive signals from the international arena as well as from the domestic front. So that's why there is a increased momentum or the surge in the market today.
Absolutely. So, Ajay Baga, India's fundamentals, like he has been explaining, remain strong, but India cannot remain decoupled.
Yeah, and Sakshi, you coined a nice phrase last week, decoupled, resilient but not insulated. I think so. We are not decoupled, definitely. We are resilient but not insulated. So at a pain threshold, we do get impacted. So it's not that we are totally decoupled. We are, very much connected, more because of the portfolio flows.
Right, resilient but not insulated. Of course, you of course are also highlighting this. But lastly, Ajay Baga, your advice to investors who've been on the edge throughout this flip-flop, as we're calling it, during, of course, Donald Trump's tariff stance. What would your advice be to investors for the near term as well as for the long term?
See, we are perturbed because the markets went down quite fast globally, but they did not go too far. So we have to see that right now uncertainty went up, and because of that the markets fell. It's a change of a world order that seems to be happening. Maybe it won't happen. Maybe it continues to happen. So there is a lot of uncertainty globally. India is in a better situation, but we won't be insulated. You have to stay invested, keep on investing regularly. That's the best way to do it. When the markets turn, they will give a year's return over a period of 2 weeks. So we can't really time it. We can't really forecast it when a sharp upswing might happen, as happened in the US last week. When Trump did his first reversal, US markets, which are the biggest in the world, went up 9% in one day. So imagine the kind of volatility there is there. And India is also facing that sentiment. We have to stay invested and stay invested in the India story. But there could be a sideways market for a number of months. We should be prepared for that. So invest what is a long-term money. Don't invest short-term money, and stay invested for the long term.
All right. So a lot really in wait and watch mode. Thank you so much for sharing your thoughts and decoding this for our viewers. That's as far as, of course, the top business news is concerned.